Welcome to CFP Exam Prep. Today we're diving into tax filing statuses, a crucial topic that frequently appears on the exam and often trips up test takers. Let's break down the 5 filing statuses. Understanding these statuses is essential because they directly impact tax brackets, standard deductions, and various phase-out limits. Remember, filing status is determined on the last day of the tax year, which is December 31st for most taxpayers. Single filing status applies to unmarried individuals or those legally separated under state law. A common exam mistake is assuming someone who's divorced mid-year can file as single. They actually can, because it's their status on December 31st that matters. Married filing jointly is typically the most advantageous filing status. Both spouses combine their income and deductions on one return. The standard deduction is double that of single filers, and tax brackets are more favorable. Here's where candidates often make mistakes. Even if one spouse had no income, couples can still file jointly. Also, if one spouse dies during the tax year, the surviving spouse can still file jointly for that year. Married filing separately often appears in tricky exam questions. While it generally results in higher taxes, there are situations where it's beneficial. For instance, if one spouse has significant medical expenses, filing separately might allow them to exceed the AGI threshold for deductions more easily. A critical point many miss is that if one spouse itemizes deductions, the other must also itemize when filing separately. Head of household status trips up many test takers. To qualify, you must be unmarried or considered unmarried, pay more than half the cost of maintaining a home, and have a qualifying person living with you for more than half the year. The qualifying person is typically a dependent child, but it could be a dependent parent who doesn't have to live with you. A common mistake is assuming any single parent automatically qualifies for HOH status. Qualifying widow or widower status is often overlooked but important for the exam. This status can be used for 2 years following the year of spouse's death if you have a dependent child. Many candidates forget that you must have been eligible to file jointly with your spouse in the year of death to qualify for this status. Let's look at a typical exam scenario. Sarah's husband died in 2021, and she has a dependent child. For 2021, she can file jointly with her deceased spouse. For 2022 and 2023, she can use qualifying widow status, getting the benefits of joint filing rates. By 2024, she must file as single or head of household if she qualifies. When approaching filing status questions on the exam, first check the date. Remember, it's the status on December 31st that matters. Second, look for qualifying dependents, especially for HOH and qualifying widow status. Third, consider whether married couples might benefit from filing separately due to specific deductions or credits. The key takeaway is that filing status affects multiple aspects of taxation. It's not just about determining tax rates, it impacts standard deductions, phase-out thresholds for various benefits, and even eligibility for certain credits and deductions. Understanding these relationships will help you tackle the more complex tax planning questions on the CFP exam.